If you are struggling with the current interest rates and feel like you are stuck in interest rate purgatory, I have some strategies I want to share with you that will save you mucho money and could make the difference between you qualifying for a home that you like versus a home that you love. Crazy thing is, most buyers have no idea that they can do this and just how beneficial it is for them. But after watching this video, you'll never make this mistake again. Okay, so take a trip with me to the way far away time of 2020 and 2021 when interest rates were averaging 3%. So what I'm about to explain would never have worked in that market. While the interest rates were super low, there were very few homes for sale, and when you combine very few homes available plus low interest rates, well, that equals multiple offers and sellers in complete control. Times are changing, and today the market is slowing, and interest rates are hovering between 7.5%. To be fair, interest rates are still dramatically lower when looking at historical rates between 1971 and current day. We are nowhere near the 16% interest rate peak of 1981. I mean, I love the 80s, but I am super glad I wasn't buying a home back then. Okay, back to the changing market. So due to the higher interest rates in comparison to the last several years, buyers are being cautious, which is leading to homes having longer days on the market. And this is where the strategy begins. This is also where it helps having a realtor who is experienced and can negotiate these terms. I promise you, having a well-trained realtor representing you matters. And if you're buying or selling a home in the Dallas Metroplex, it's your lucky day because I've been a realtor for 12 years and I am not learning on the job. Okay, so the strategy we are speaking about today is having the seller buy down your interest rate. And by the way, this can be a win-win for both buyers and sellers. Now, please keep in mind, I am not a lender and these numbers are not exact and should only be used as an illustration to help you understand the concept of a seller buy down. Please speak to your lender for personalized loan details. And if you don't have a lender, comment below and I'll be happy to share some highly qualified lender names to help you get started. So let's take a look at just how great this option can be for you. We're going to get into the weeds a bit here, but I promise this is invaluable information. So in our example, the sales price for the home is $630,000 and the buyer has put 20% down, so their loan amount comes to $504,000 with an interest rate of 7.375%. In this scenario, the house payment for principal and interest would be $3,481. Example 2 shows a sales price of $610,000, so the seller has cut the price by $20,000. Remember, the house was originally listed for $630,000. So the rest of the terms stay the same, with buyer putting 20% down with the same interest rate, but now the house payment is only $3,370 a month, and the buyer is saving about $111 a month on their house payment. Here's where it gets exciting. In example 3, the buyer's realtor has negotiated a seller contribution for a 2-1 buy down instead of a price reduction. And if you are asking why would a seller agree to do that, take a look at this example. Sales price remains at the original amount, no price reduction, so we'll stay with the $630,000. However, the seller will credit the buyer $11,945 at closing in order to buy down the rate. So now, instead of Mr. Buyer paying $3,481, the first year of payments are only $2,822 a month, which is an equivalent of a 2% rate reduction and a savings of $659 each month for year 1. The second year goes up slightly, but is still lower than the original payment of $3,481. So year 2 payments are $3,144, which is equivalent to a 1% rate reduction and translates to a savings of $337 each month. You'll notice that the first year was a 2% rate reduction and the second year was a 1% rate reduction, hence the name 2-1 buy down. So here's the overview. The seller is happy because he was able to net more at closing by providing a buy down versus a price reduction. And the buyer is happy because he was able to reduce his house payment for the first 2 years of the loan with the ability to refinance when the rates go down. Did you notice the seller only provided a credit of $11,945 to the buyer, but yet it was more beneficial to lowering the buyer's house payment for the first 2 years than a $20,000 price reduction? So it's easy to see that this is a win-win for both sellers and buyers. Sellers can help buyers reduce their house payment when buying down points, which is ultimately far more useful to the buyer than a price reduction, and still allow sellers to net more money at closing. This is a great option that wasn't feasible the last several years, but 2023 is a whole new ballgame. After watching this, you may be wondering how much you need to save when buying a home. So I've added this video over here that discusses how much closing costs are in Texas. And if you've never bought a home before, it also walks you through expenses that you might not be expecting and different types of loans. Thanks for watching today, and don't forget, I'd love to help you buy or sell your Texas nest.